I stood here 12 months ago, and at that time we had to close a mine down, the Jaguar mine in Western Australia, while we were still keep on investing in our new mines, Avoca Tank at Triton. It was quite an interesting time. 12 months later, the Jaguar mine is still in care and maintenance, but we can proudly say that we have managed to set the company up for success going forward. Currently, we got 3 producing mines. We got Triton copper mine in New South Wales, doing around 20 to 25,000 tons of copper, and we are starting to see the benefits of getting higher grade mines into production over the last 12 months. We'll talk a bit more about it. Then we got the Cracow gold mine in Queensland, doing about 45,000 ounces of gold. And then in North Queensland, we're currently mining the Mount Colin copper mine, doing about 7,000 tons of copper. But that will transition into another mine called the Barbara mine. We also got part of the development projects. We obviously see Jaguar, care and maintenance as a restart. Current work is underway to work out the best option to restart the mine. And then, as part of the acquisition we made 2 years ago, we bought the Stockman project, which is in Victoria, which is a significant, large project which we're busy progressing to feasibility study. So as you can see, targeting 40 to 46,000 tons of copper equivalent production out of the business. Each one of these mines has got substantial upside, substantial opportunity to grow within the current mining areas, but also looking at the organic growth in the business, significant opportunity to further grow the business with what we have in our portfolio. Just a snapshot, you can see there on that graph on the top, the time I stood here last year where the share price has gone to. That was all on the back of the closure of a mine which we only bought 12 months before. And the reason for the closure of Jaguar was the drop in the zinc price by around 30% at the time, and the capital investment required to start the next resource. We decided it's better to put in care and maintenance and work up the best startup plan possible and bring it back in production. Pretty small board. The executive team has been working together as a team for a very long time. We actually ran Auto Goldfields, which we had the Paddington mine out here with us. So we've all been working together for more than 14, 15 years. So we've seen the business progressing, and we can see where we're going with the business as a team with a fairly small board. You can see there Washington Saul Patterson is one of our major shareholders, and they became a shareholder when we bought the Round Oak assets from them 2 years ago, because part of that was obviously equity as part of the payment. This is a very busy slide, but there's only one takeaway in my view from this slide, is the size of the resource and inventory we have in the business. So there's currently 820,000 tons of copper metal in resource, 1 million tons of zinc, and 1.4 million ounces of gold. So there's a huge portfolio of resources within the operating mines. All of them are generating cash and contribute to the growth. And then the key is the restart of Jag, but specifically Stockman, which you'll see in the slides coming up, already have a 12-plus year reserve life with significant grades between copper and zinc, which will make it a very attractive project to kick off. I'll just spend a bit of time going into the different mines. So you look at Triton. Triton is our core asset and always been. We've been running it now as a team for over 10 years, but it's been operating from 2005. 2,330 square kilometers of exploration ground, and historically, most of the exploration was in that southern part of the tenement package. So we have moved the focus 2 years ago to see what is in the northern side of the tenements, and in a very short space of time, discovered the Constellation deposit, which is already sitting at 7 million tons at more than 2% copper. And I'll show you a few slides on that. So significant progress. There's still a lot to do in that northern side, but we've seen in the last 2 years, a lot of focus was on the new projects. So we start up 2 new mines, Avoca Tank and Budgery, as you can see on that slide. So we moved away from mining Triton. The Triton mine was mining at 1.2% copper, 1,300 meters deep. So we moved away to remove the reliability of Triton at depth to Avoca tank, which is running at nearly 3% copper. So it's all about perhaps lower volume, higher grade. So in FY24, we did 20,000 tons of copper. In FY25, we see that going up to a higher end of 25, between 20 and 25,000 tons. And that's all on the back of this higher grade, but also the key focus of simplifying the business in FY25 and trying to mine less areas which complicate and set the business up for conflict. This year we'll do 3 to 4 mines and focus on grade and tons, and that's the reason we've invested 2 years ago, or the last 2 years, into these higher grade ore bodies. This is sort of just a production profile. So currently in FY25, we will be mining Triton, Marrawambi, Avoca Tank, and Budgerygar. And Avoca Tank and Budgerygar is really those higher grade ore bodies coming in. In FY25, this year we will start the Marrawambi pit cutback. It will be in production in FY26, and then you bring in Constellation in FY27. So you've got a pipeline of projects, and all these projects still extends a depth and is open. So quite a lot of exploration work is happening currently to define those extensions, specifically at Avoca Tank and Budgerygar in FY25. That's just an image of the Murra pit. So that cutback will happen, will kick off in November. It will do about 1.2 million tons at 1.2% copper. Now that will, in FY26, fill the 1.8 million ton process plant if you mine that plus Avoca Tank and Budgerygar, and that will then see us getting into production the Constellation deposit, which is what you see on the slide there. So currently, it's a 7 million ton resource. We are busy drilling it right now to increase the confidence level of the resource, to be able to put a reserve onto an indicated resource onto it and bring out a feasibility study. The drilling will be done by December. We should have results in the first quarter in calendar year 25 and bring the feasibility study out. The aim is there, it starts right at surface, and to start it as an open cut mine and then go underground. And that we already see will be a substantial improvement in the life of the business at Triton. Moving on to Cracow, the photo you see there is the plant. We bought it from Evolution, I think it's about 4 years ago now. And it's always been a really good little process facility. Not little, it's doing 500,000 tons, but it's in very, very good condition. This year we invested, or last financial year we invested $16 million in a new tailings dam lift, which will give us another 3 years of runway for Cracow. Now, it's just been one of those mines which never had a long reserve life, but at least I know there's a lot of gold miners in the room. That's pretty standard for some of these ore bodies. But you can see since the acquisition in FY21, we have significantly improved the resource position by starting and keep on going to start to step out in the Western Vein field. If you look at the areas there, we mainly mine the Western Vein field. We've seen a lot of opportunity now back in further west of that Western Vein field, but to the south is where we believe you're going to get the substantial increase in the potential resource growth for Cracow. So where do we go in terms of exploration and increase in life? You see the top right-hand side is where we're currently mining, and a lot of the exploration was going back to old areas and keep drilling them out, and being very successful. And it's always been mining around, since we owned it, at least between 40 and 50,000 ounces. We're now starting to step out to that west. You see the Western Frontier, we call it, and to some new structures discovered towards the west. Now that's where you're going to increase the resource, and that's where you can potentially find another structure to grow this resource significantly. So this year we're starting to focus on stepping out of the old areas. And we will first step out to the near structures and then start to step out to that Western Frontier. The other big opportunities, of course, to the south, you can see there already more than 2 million ounces out of the Western Vein field, 1 million ounces out of the Golden Plateau area, and to the south, it hasn't been tested. So we're doing some some test work. We're trying to identify some targets, and we will start to do some drilling in that southern vein field to further see the opportunity to grow. North Queensland, what you see there is the full footprint of that mine, small underground mine. We don't have a plant, we don't have a process facility. We mine it, truck it to Ernest Henry, they process it, and we get our returns. It has been, all the capital is spent, it's only got another 4 or 5 months left. So we're in the process of extracting ourselves out of the mine. It will generate good cash in the next 4 to 5 months, and that will set it up for the next project called Barbara, which is exactly the same model. It's a small underground from an existing open pit mine, which was previously treated at Mount Isa, and we will go back into that and start to see. The aim is to transition from Mount Collins straight into Barbara and maintain that around 7,000 to 10,000 tons of copper out of that Mount Isa region as part of the overall portfolio. This is Jaguar. Unfortunately, as I said earlier, we had to put it into care and maintenance 12 months ago. We're in the final stages of different option studies to see how we restart the Jaguar mine. It has got a very good resource. There's 8 million tons of more than 3 or 4% copper equivalent. It's about finding the right way to extract those tons. So within the next 2 months or 3 months, we will make a decision on what option is the best startup option, finish off studies, and then make a decision on when do you start it or what do you strategically do with the Jaguar mine. At the same time, though, you can see in that image, it is a very good gold exploration play, and it sits right between some really good big gold players. We did keep the geologists on board when we put it in care and maintenance, at least 2, and their focus was go and identify the gold resource opportunity or option for the Jaguar mine. We have drilled 2 holes in the last 3 months. We're waiting for the assay. We've seen some very interesting structures through that drilling. Now, if you talk to some of the geos, and especially geos on the board, Colin Murray, he would like to drill that out tomorrow. So a lot of focus, but the decision on the restart for Jag will be made in the next 3 months. This is the main reason why we bought the Round Oak assets. So Stockman is a project in Victoria. It's an historical mine. If we bought it with a feasibility study where the recoveries was running at 75% for both copper and zinc, gold running at 25, 26, 28%, and silver very low. Since we updated the feasibility study, it became very clear that those economics doesn't go down. You need to re-look at the economics. We identified the Albion process, which is a process which is used around the world, to see what that impact of that can be on the project. Now, we've done the first round of metallurgical studies, and the recoveries just came back to above 90% for copper and zinc. Gold doubled to nearly 60%, and there's opportunities to improve that. So a lot of focus will now go into further metallurgical studies, update the feasibility study, and flow sheet with the Albion process as part of the solution, and then bring the feasibility study out. So the aim is by first quarter in calendar 25 to bring that study to market. Very exciting, very good results. And as you can see there, there's already a 12-year reserve life just on the one mine. There's another ore body, Wilga, which we haven't included in the study. We pulled it out because we think there's more economic value just looking at the mine in that image. And once we do the feasibility study. I get a lot of questions about approval process in Victoria. Why do you think it will work? Now, clearly, there's already a mining lease on. We already got environmental approvals to use the old tailings dam. All the major approvals is in place. It's finalizing the flow sheets and then bring that back to the final approval process. So we don't believe that's the risk of the project. The risk of the project has been the recoveries, and that has been resolved. I guess, just to close, although we had a challenging time closing the Jaguar mine, We have set the business up. We've seen the recovery of the Triton copper mine with the delays in some of the capital projects, starting up new mines. They're all now in production. 25, we see the increase in production coming out of Triton. Krakow keeps on delivering around that 45,000 ounces and stepping that exploration out. And the key focus for us is to bring these value projects in Jag and Stockman back to market as soon as we can. Thank you very much.